I want to start with a number. $214,000. That is not an abstract figure to me. That is 8 years of early mornings. It is a business I built from a folding table in a spare bedroom. It is decisions I made carefully, consistently, sometimes painfully, reinvesting instead of spending, saving instead of expanding too fast, trusting the process even when the process was slow. $214,000. Gone. Not in a market crash. Not in a bad investment. Not in a risk I chose to take. Stolen. Methodically. Over 22 months. By the man I had hired to protect it. His name was Gerald. He had a website, a framed CPA license on his office wall, and 15 years of client testimonials. He drove a sensible car and wore sensible shoes and spoke about fiduciary responsibility the way people do when they are very good at performing trustworthiness. He was also stealing from me the entire time I sat across from him nodding at spreadsheets. What happened next took 11 months, 3 attorneys, 1 forensic accountant, a criminal investigation, and a civil lawsuit that is, as of the time I'm telling you this story, fully resolved. I got it back. Not all of it, but more than you'd expect. And Gerald? Gerald's CPA license no longer exists. I am going to walk you through exactly how this happened, how he stole it, how I found out, what I did in the first 48 hours, and how the legal process unfolded from a police report to a criminal conviction. I am telling you this because financial fraud by trusted professionals is one of the most underreported crimes in existence. Not because it doesn't happen, but because the people it happens to are often too ashamed to talk about it. I am not ashamed. I was deceived by someone skilled at deception. That is not a character flaw. That is a crime. And this is what you do about it. I hired Gerald in year 3 of my business. Before Gerald, I had been managing my own books, a system that worked when the business was small but was becoming unsustainable as revenue grew. I needed someone I could trust completely, someone who would handle payroll, quarterly taxes, annual filings, and the general financial architecture of a growing operation. I found Gerald through a referral. A business owner I respected, someone whose judgment I trusted, had used him for 6 years without a single issue. That referral mattered to me more than any credential. I am telling you that because I want you to understand how referrals can be weaponized by people who have spent years cultivating exactly that kind of trust. My first meeting with Gerald lasted 2 hours. He was thorough, organized, and spoke in the particular fluent shorthand of someone who genuinely understood the financial mechanics of small business ownership. He asked good questions. He listened carefully. He identified 2 inefficiencies in my existing setup within the first 30 minutes. I hired him on the spot. For the first year and a half, everything was fine. My taxes were filed on time. My quarterly estimates were accurate. When I had questions, he answered them clearly. When I needed projections, he produced them quickly. He was, by every visible measure, exactly what I had hired him to be. What I didn't know, what I had no way of knowing from the outside, was that Gerald had done this before. Not to me, to someone else, in another state, under a slightly different name. And the reason I didn't know was that it had never gone to trial. What I also didn't know was that Gerald had structured our financial arrangement in a way that gave him access he didn't need but that I, not a financial expert, had no reason to question. He had signature authority on an operating account. He managed the relationship with my business bank directly. He filed everything on my behalf. Every one of those things, individually, is a normal arrangement between a business owner and a trusted accountant. Together, they were a blueprint. A new bookkeeper I had recently hired to handle day-to-day invoicing. A young woman named Dara who had been on the job for exactly 6 weeks. Flagged something. She came to me on a Tuesday morning with a printout and a look on her face that I recognized immediately as the look of someone who has found something they genuinely hoped they wouldn't find. She said, "I need to show you something and I need you to tell me if I'm reading this wrong." I looked at the printout. It was a bank transaction log from the operating account, the one Gerald managed. There was a recurring transfer. Monthly, $3,200. Going to an LLC with a generic name I didn't recognize. "What is this?" I said. "I don't know," Dara said. "I've been going back through the records and it's been happening for, I think about 18 months. 18 months. At $3,200 per month. That's $57,600 before we found anything else." There was more. Once I engaged a forensic accountant. A woman named Patricia who came recommended by my attorney and who approached our records with the particular patience of someone dismantling a bomb. The full picture emerged over 3 weeks of analysis. Gerald had used 4 methods simultaneously. Method 1. The recurring transfer Dara had found. An LLC Gerald had registered under a variant of his wife's maiden name. The transfers were coded in my books as consulting fees, a category vague enough to pass a casual review and specific enough to look legitimate to anyone not looking closely. Method 2. Invoice inflation. Gerald managed relationships with 3 of my regular vendors. He had been submitting inflated invoices, adding between 8 and 15% to actual vendor charges, and pocketing the difference. The vendors received what they were owed. I paid what Gerald told me I owed. The gap went to Gerald. Method 3. A ghost payroll entry. A part-time employee who did not exist, a name, a bank account Gerald controlled, a bi-weekly payroll deposit. 22 months of bi-weekly deposits. Method 4. Tax refund diversion. In year 2 of the scheme, I was entitled to a small business tax refund. Gerald had updated the refund deposit information with the IRS to route it to an account he controlled. I never knew the refund existed. For methods, 22 months, $214,000. Patricia put the full report on my desk on a Thursday afternoon. It was 41 pages long. I read every word. At this point I had the forensic report, I had Patricia's testimony, and I had 22 months of documented fraud. What I didn't have yet was a plan. And what I did in the next 48 hours determined everything that followed. I want to walk you through the first 48 hours precisely, because if this ever happens to you, the order of operations matters enormously. My first instinct was to call Gerald, to give him a chance to explain, to ask if there had been some mistake. Patricia stopped me before I picked up the phone. She said, "If you call him right now, one of 2 things happens. Either he knows you know and he starts moving money, destroying records, and preparing a defense, or he knows you know and he disappears. Neither of those outcomes helps you." I put the phone down. My attorney, who I called within an hour of reading Patricia's report, gave me a precise list of actions to take before close of business that day. Remove Gerald's signature authority from every account. Change every password he had access to. Contact my bank directly and flag the account for fraud review. Do not close the accounts, closing them can complicate the paper trail. Freeze access, document everything, but keep the accounts open. I did all of it within 4 hours. Financial fraud above a certain threshold, which $214,000 far exceeded, is a felony. My attorney filed a police report that same evening on my behalf with the Economic Crimes Unit of the local police department. I want to be honest about what the police said. They took the report, assigned a detective, and told me the investigation would take time. Months, potentially. Economic crimes are complex and under-resourced. They were not wrong. But the report mattered not just legally but strategically. Having an active criminal investigation running simultaneously with a civil lawsuit changes the dynamic of every negotiation. My attorney filed a civil complaint the following morning. Fraud, breach of fiduciary duty, conversion of funds, and unjust enrichment. For causes of action. 41 pages of forensic documentation attached as exhibits. Gerald was served 4 days later. I am told he went very pale when he read it. The final move in the first 48 hours was one my attorney suggested, and I want to emphasize because it is the one most people don't think of. We filed a complaint with the state CPA licensing board. Gerald's license was the source of his legitimacy. The thing that made clients trust him, the thing that gave him access, the thing that made his fraud possible. Threatening, it was not just punitive. It was leverage. Gerald now had a criminal investigation, a civil lawsuit, and a licensing board investigation running simultaneously. He was, as my attorney put it, with professional understatement, in a difficult position. The civil case moved faster than the criminal one. Civil cases usually do, because the standard of proof is lower and the incentives for settlement are higher. Gerald's attorney made contact within 3 weeks of service. The opening position was predictable. The transfers were legitimate consulting fees for services rendered, the invoice discrepancies were accounting errors, the ghost payroll entry was a clerical mistake, and the tax refund diversion, and I want you to appreciate the creativity of this argument, was the result of a miscommunication about deposit preferences. My attorney's response was to send Gerald's attorney the 41-page forensic report, Patricia's expert affidavit, and a single-sentence cover letter that read, "We look forward to exploring these explanations in discovery." Gerald's attorney requested a settlement conference within a week. The settlement conference was where something happened that I did not expect, something that changed the entire financial outcome of the case. And it started with a question Gerald's own attorney asked him in the room. The settlement conference was held in a neutral attorney's office. A conference room with a long table and bad coffee and the particular silence of people who are about to discuss large amounts of money. Gerald was there in person. I had not seen him since before I knew. I want to tell you that I looked at him with fury, but the honest answer is that I looked at him with the same forensic attention I'd been applying to his spreadsheets. I was reading him the way I'd been reading his transactions, looking for what was real. He looked diminished. Not remorseful, I want to be precise about that distinction. Diminished. Smaller than the man who had sat across from me in his sensible shoes and talked about fiduciary responsibility. The moment that changed the financial outcome came about 40 minutes into the conference, when Gerald's attorney asked Gerald, quietly, in what he perhaps thought was a private aside, whether there were any other accounts we hadn't found. Gerald's answer, a fractional hesitation before he said no, was the answer of someone who had not fully prepared for the question. Patricia had suspected there was a fifth account. She had flagged it as a possibility in her report, a gap in the transaction flow that suggested money going somewhere she couldn't trace. Gerald's hesitation confirmed it. My attorney called a recess. We spent 20 minutes in a side room. When we returned to the table, my attorney added a demand to the settlement terms. Full financial disclosure under oath, with penalties for concealment. Gerald's attorney asked for 3 days to consult with his client. 3 days later, Gerald disclosed a fifth account. The fifth account contained $31,000. It was added to the settlement. The civil settlement was reached at month 4. I cannot disclose the exact figure. That is a condition of the agreement. What I can tell you is that between the settlement, the recovered funds from the fifth account, and the insurance claim I filed against Gerald's professional liability policy, not everything, not $214,000, but enough that the business survived. Enough that the early mornings and the folding table and the careful, consistent decisions had not been entirely undone. Gerald's criminal case concluded 7 months after the civil settlement. He pled guilty to 2 counts of felony theft and 1 count of fraud. He was sentenced to 18 months, suspended in favor of probation, with restitution payments ordered. His CPA license was revoked by the state licensing board 30 days after the guilty plea. He cannot practice as an accountant again. Here is what I want you to know. The things I learned that I wish someone had told me before any of this happened. First, verify your accountant's license independently before you hire them, and check it again periodically. Licenses can be revoked or suspended. The board records are public. Takes 3 minutes. Second, no one, no matter how trusted, how referred, how credentialed, should have unchecked signature authority on your accounts. Require dual authorization above a certain threshold. Build that into your setup from the beginning. Third, review your own bank statements. Not your accountant's summary of your bank statements. The actual statements. Monthly. Even if it takes an hour. Especially if it takes an hour. Fourth, professional liability insurance exists for accountants. Ask for proof of it before you sign anything. If they balk at providing it, that is your answer. Fifth, if you find something, do not confront first. Secure first. Document first. Attorney first. Then confront. Dara, by the way, the bookkeeper who found the first transfer in week 6 of her job, is now my full-time finance manager. She got a raise the week the settlement was signed. She earned it 6 weeks into the job. Some people, when they find something they hoped they wouldn't find, look away. Dara looked closer. That is the kind of person you build a business with. If you have a trusted financial professional handling your money right now, go check your statements this week. Not because you should be paranoid, because you should be informed. Those are different things. Drop a money bag in the comments if the story made you want to pull up your bank account right now. And if it found you at the right moment, subscribe. Every week, another story. Some of them might save you something. Next week, a story about a landlord who thought the lease was his weapon. He didn't know she'd read every word of it. See you then.